Taxes for day traders. Hey, you made a bunch of money day trading. Good for you. Guess what? You owe the IRS their portion. And if you made a lot day trading, you're going to be paying a lot to the IRS. Now, there's a few things that makes day trading taxes a little bit complicated, but at the end of the day, it's not that complicated, especially if you hire a CPA. I recommend that if you're day trading, you need to have a CPA that knows what they're doing with day trading taxes, because it's not something that a lot of CPAs specialize in or even know how to do. So get a CPA. I am not a financial advisor. I'm not qualified to give you official responses, but I've done day trading taxes now for 2-3 years. I have a CPA do it, and there's a few things I have learned. Now, the main thing with day trading taxes, and especially if you're a day trader, is something called the wash sale rule. Now, this is a law that the US has made to stop people from tax loss harvesting. So what people would do is they would have a position, they're red on it, they're losing, they will sell that position to take that loss, and then they will buy back that same position at the same amount they had, the same quantity, but they're going to take that loss that they technically locked in, and they're going to try to use that to offset their income at the end of the year. They're going to try to use that as a loss. It's called tax loss harvesting. Now, to stop that, the U.S. has put in a law where if you buy and sell the same security, if you sell it and then buy it again within 30 days or 60 days, it's going to count as a wash sale, and you're not going to be able to deduct those losses. Okay, so what that is going to do is when it comes time at the end of the year, you're going to look at your profits and it's going to show that you made a lot more than you actually did. And that's because wash sales, it's not allowing that loss to be deducted from your gain, and that can create an issue where you're owing taxes on money you never made. But as a day trader, we're exempt from that. If you qualify as a day trader and you elect for the mark-to-market election form 475 with the IRS, and you need to qualify by proving that you're actually day trading for a living, or you're day trading to make serious money. Now, the guidelines and the rules for becoming that specification as a day trader to the IRS, it's a little bit of a gray area, but for the most part, if you're waking up trading every day, you have a lot of history of trading, you're obviously doing it to capitalize on gains intraday, you're not trying to do any sort of tax loss harvesting scheme, then you'll probably qualify to apply for the mark-to-market election. Secondly, the IRS likes to be paid throughout the year, so you will be making quarterly payments. Now, this is another thing for the CPA to calculate it all out. There's a couple safe harbor rules that you can follow so that you don't get any kind of penalties at the end of the year, because if you underpay, they will charge you interest on that underpayment for the period of time that it was underpaid. So it's always better to front load your estimated payments, pay a little bit more at the beginning of the year. That way, if you do come in a little low or you're going to get a penalty, you're only going to pay the penalty on the amount that you underpaid. Say you underpaid your third payment, your third quarterly payment, you're only going to pay the penalty for that underpayment, the interest from that period to the end of the year. So that it's a shorter period where they will accrue interest on, but you can avoid all of that by following the safe harbor rule, which is either pay 110% of last year's tax liability. So you pay 110% of last year's, whatever it came out last year, which is what I'm doing, or you pay 90% of the current year's tax liability. So two safe harbor rules. Again, look into that on the IRS website. Have your CPA. Your CPA will know this. Okay, that sort of knowledge is not specific to day trading, but again, you will be paying quarterly payments as a day trader. Lastly, a lot of people talk about, hey, can I save money by incorporating my trading business and going under a corporation? Yeah, you can. Okay, you can pay yourself a salary through an S-corp. That's what you would do is you set up an S-corp. You would pay yourself a salary, and it's basically, now that you have earned income from that corporation, now you can contribute to an IRA. You can contribute to all these things. You can take other tax favorable elections, and that can save you money. There is money to be saved there. Now, the more and more money you make, the less and less money you're really going to save. So it's not like it scales up. But yeah, you can contribute to an IRA. You can set up a retirement account, and that can reduce the total income that you have made on the year and reduce your tax liability. Now, going back a little bit, backpedaling a little bit, as a day trader, since it's not considered earned income, we do not have to pay self-employment tax. So it's a little bit of a favorable thing for us where we don't have to pay that tax. So we do save some money there. So if you do the S-corp and you're paying yourself a salary, yes, you are going to have to pay that self-employment tax, and that is going to take a ding and a big chunk out of the money you save. So the S-corporation, It's good for some people. It's not something that if you're new to trading that you need to get on right away. It's not like you're saving a whole lot of money. But yes, if you do an S-corp, there is some advantages to doing that, but there also is some drawbacks. It's going to be a lot more complicated to operate. You're going to have software to keep track of what you're paying yourself. You're going to have software to keep track of all these payments and quarterly payments you have to do. So keep that in mind. But guys, that's the main thing, right? Wash sales, election 475. You have to make quarterly payments. If you're really interested in setting up an S-corp to try to save as much money as possible and contributing to retirement accounts and paying yourself a salary or whatnot, yeah, you can do the not 475. You can do the S-corp. Again, that's something that you should probably pay for somebody who knows what they're doing to set that up. It is a little tedious. So anyways, guys, it's tax day, April 18th. Get your taxes in. I paid my taxes. It hurts. It's a gut punch, but there's no way around it. So if you make a lot of money, you're going to be paying a lot of money to the IRS. And so that's just the way it is. So with that said, guys, leave in the comments below how you guys handle taxes. Let me know in the comments below where you guys are from, because a lot of you guys are not even from America, so that this tax lesson maybe doesn't apply to you. But let me know how the taxes are in your country. Let me know how you do your taxes here in America. Let me know anything. And of course, guys, if you feel led, leave a like. All right. So with that said, I'm not going to keep you guys any longer. That's day trading taxes for you. Take it easy.